Shidim Shari. It is Saturday, May 17, 2025. Stock market weekend review. The last stream. I don't have anything planned specifically, but it's gonna be probably a little bit more rambling than the typical weekend review. Might even run longer, might even be shorter. I don't know. What I do know at the start is I have no desire, none, to run through the same ticker that I normally do every Saturday. It get old, it get tiring, it get boring. I don't know about you, but for me, it is extremely boring to go through the 20 plus tickers every Saturday saying the same thing. Well, you know what I mean. Not the same thing. Looking at the same concept. How many times can I go over the same concept and people not learning it right? I mean, I completely understand if someone find the channel to be boring or not worthwhile or a waste of their time, which is good. Trust me, I'd rather have people say, you teach me nothing new here. I'd rather have people tell me, I stopped watching your video because I learned nothing from them. Good. Good. I hope you learn nothing more, whether it's bad lesson, good lesson, but you're done. You're on your own. You can make money trading on your own. If that's the case, good. If you're done watching my videos or can't stand watching it, too boring, but you still lose money, well, I don't know what to tell you. Okay, it is what it is. But let's get going here. A little bit rambling, but it would be. It literally is 30 years ago. 1995, summer of 1995 was my first job in investment. Okay, I spent almost 6 years total, but from 1995 on, I worked various jobs. Start out with risk analyst, asset allocator, portfolio manager, quant analyst was the last one. Quant analyst stands for quantitative analyst. That is on Wall Street for the past decade. You heard the term quant. That's computer trading. That's computer bot trading. And my last job in investment banking was writing code for the bots for the firm I work for. And that was my first exposure to technical analysis, because that's what we do is coders, programmers for the bots. You data mine. Okay, the term data mine back in the 90s and early 2000s have been replaced. Today, if you heard on TV, Wall Street, school, you heard college degree, data science. Trying to make it more, I don't know, what's the term for it? Data mining. I like it. I mean, back in the days when I was data mining, I didn't hate it. I didn't hate the term quant. When I first heard of data science, I'm just like, what is that? And then when I find out what data science is, I'm just like, oh. It's data mining. It's look into historical past behavior. The internet is nothing but data mining, okay? When you go on Google and then you see ads pop up on things that you search 5 seconds ago on the banners, right? That's what it is, okay? Even on email, you can Google something. Next thing you know, on your Google Mail, you get offers and discount and email from, the exact thing that you were searching for. That's data science. And data science is data mining. And data mining is what I did in my last job, as far as writing codes for the bots. And technical analysis is basically the tool that many bots, I'm not saying all bots, the bots are a combination of technical analysis as well as fundamental, okay? Economic related. So it's all the perfect approach to trading and long-term investing is marry both technical analysis and fundamental, because fundamental as well as news are the catalysts that move the stock. Okay? The stock doesn't just go up or down on nothing. It moves on the desire of people wanting to buy or not want to hold it. Okay, this is one thing that baffled my mind as long as I have been participating in the market, is that a lot of people cannot wrap their brain or lack thereof with the concept that there are two sides to every trade. How can people not understand that? You hear people always complaining, whining, crying, wonder out loud. Why is XYZ down? Why? How often do you hear the opposite? Why is XYZ up so much? Right? It is usually, why is it down so much? Have you read the news? Have you seen the news? When it comes down to news, guess what? As always, I advise it. This stream is more of a recap of everything I talk about on this channel in the past 2.5 years. Yeah. So it's a recap, okay? So I try to recap everything in one final stream. And just like that, I lost my train of thoughts. When it comes down to, the way a stock move, I advise people to always look first at company specific. Like, let's say, you open up your computer and you see a stock that you love down hard in pre-market. First thing you do is look at the company's specific news. Is there any news that impact this company specifically? That's the first thing. If not, go to sector specific. So you go from company to sector. So let's say your favorite company is in pharmaceutical. If it's down or if it's up significantly in pre-market, is there news? Is there new drug approval? Is there bad result on a drug trial? What is it specifically to the company that making the big move? If not, go to the sector. Is there a sector sell-off? Is there a sector money moving in, money flow into the sector? Is there something geopolitical that moved it? It's always the steps that I take as far as company specific and then sector specific, and then of course overall market specific is the last. So there are 3-tier level that I look at when I come down to movement of a specific stock on any specific sector. Okay, 3 level: company, sector, and overall market. it's natural for a lot of people to look at company specific and freak out. Oh my God, down 5% pre-market. What is going on? Well, look at the news, okay? It's knee-jerk reaction is exactly how the market move. Okay, this is what a lot of people can't wrap their heads is the market is very emotional based. Fundamental that people love to talk about on CNBC or wherever. Fundamental, try to use logic into why a stock should be keyword should be at this price or that price or whatever. That's what fundamental trying to use is trying to put logic into where something should be valued. Ridiculous. The market does not move on logic. I wish it does. I wish we, the human species, operates on logic. Okay, trust me, I wish we do. We're not. We are emotional bankrupt. We are an emotional species that is emotionally bankrupt, greed and fear. That's how we operate. Shoot first, ask later. Sell first, ask later. Okay, it's always opposite of logic. We are. That's why TA is very useful. Fundamental, try to bring logic to the table. TA bring emotional measure to the equation of investing / trading. So yeah, it's an interesting aspect of human behavior for sure. Okay. On my screen is SPY comparing to what is that index? Okay, first of all, it's not the candle is EFA. Okay, is EFA index. If you don't know the EFA index, it's been around decades. It is an index that is a global index, and back in my days of being an asset allocator or risk management for the portfolio, I disagree from the very start back in the mid-90s, because when you have a client that walk into your office, it's my job to educate them. You should have 10% based on your age, your risk profile. You should have fixed income, 20% in US large cap, 10% in US small cap, 15% in global stock. That's where EFA, this is where this candle represent. And then you have developing market, which is third world stuff. Back then it was like India, China in the mid-90s. So that was my job. My job is to try to allocate each client portfolio into a portfolio mix that give them the best chance for lower risk, lower volatility with the maximum potential return. Okay, that was my job. My first two jobs for the first 3 years. That was what I did, along with managing portfolio and all kind of other stuff. I was multitasking, but I hated that job. I argued with my boss daily, constantly, because I was data mining, and historical fact showed that the correlation of the world are joining closer and closer to a point where there is no benefits, none, to diversify into buying a mutual fund, a global mutual fund, and then an U.S. centric mutual fund, because that's what we do, right? We put 20% into U.S. specific large cap fund, and then 15% into global fund, because the global market move very differently. Okay, so here the candle is EFA index, and the purple is the S&P 500. Is there a significant difference? Hell no. That was my take. That was my take back in the mid 90s. This is where I have a huge problem with the data miners that use data back to the mid 40s. Come on. The world has changed a lot since the mid 40s, or the 60s, or the 70s. The world is not the same. If you are using data, how the market move, how the economy changed, and all that stuff back from the 50s, 60s, 70s, and trying to justify how it is today, or trying to compare and extrapolate where things should be or how things should behave based on what happened back in the 70s, you're out of your mind. It's stupid. Stop it. Okay? That's how I was back in the mid 90s with my bosses. I'm just like, that's not true. The correlation, to reduce volatility, to reduce risk in the market, you want to have a bunch of assets that don't move together, right? So if the US stock market is up, but European market is down a little bit, it balances out when the US market is down a lot and the European market is up, right? That's what asset allocation do. You're trying to reduce volatility by diversify. But look at this chart, the last 5 years with the pandemic. And you can go back 10 years, it's the same thing, okay? I'm not cherry picking. It's ridiculous. It's stupid. It's even back in the mid 90s, I said stop it. Stop with the asset allocation, diversify to Europe, blah blah blah. Even then, even in the mid 90s, you heard this everywhere. When we sneeze, Europe catch a cold. If diversify globally, reduce risk, then why would Europe catch a cold if we sneeze? It is just nonsense. Okay, Wall Street is no different than the politician in DC. A whole lot of nonsense. A lot of people filling the airtime on CNBC with nonsense that is unaccountable, like the politician. Just like Tom Lee. Tom Lee can go out there on a daily basis, make all kind of prediction. Sure, if I go on CNBC and make 5 predictions a day, sure, can I hit one? Yeah. But I'm likely to be wrong on even 2 or 3 or 4 out of the 5, like Tom Lee has been. But guess what? Does anybody call out Tom Lee that, dude, you're not even hitting 50% on your call? Okay? You've been calling for Bitcoin to be 250K 5 years ago. It's not even anywhere half of that. Did anybody call out Tom Lee for his 250K Bitcoin prediction 3, 4, 5 years ago? Wrong. Okay? It's so when it comes down to politicians, people, talking heads on CNBC, they fill airtime with nonsense. Okay? I hope people learn that from my channel, that it's up to you to decipher what's going on. It's up to you to make your own decision. If you rely on like some dude on the internet, on social media, tell you what to buy or sell, oh boy, I don't know that many people that got rich because they listen to someone else. Oh, if you need to listen to guru for self-help to become successful in life, breaking news. A lot of people that are successful in life, they got there on their own. Not listening to any guru. Okay? I'm not here to be your guru. Okay. Wow, that was a lot of rambling. All right, let's take a look at a few things. Not that I want to do the same ticker, right? I'm tired. I'm tired. Just sick and tired. BTC. Let's remove the comparison, S&P 500. But even then, just before I remove it, just look. Ain't that something? When it come down to it, from start to finish over the past year, if you invest in BTC with slightly more volatility, but not always. Look, right here, it underperformed the market, but right here, the S&P 500 underperformed BTC, but in the end, look, same spot. Shocking, 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 shocking. Let me say it one more time. Shocking. All that narrative, all the narrative of the crypto boy fan club cult, all of them, wrong. Okay, wrong. Now, does that mean that crypto can outperform the S&P 500 next year? 5 years? I don't know. But if you follow this channel for the past 2.5 years, I was debunking the nonsense, halving cycle this, supply shock that, whatever, okay, whatever. It is a risk on asset. Like it or not, that's what it is. It is a risk on asset. When money flow into the asset, it goes up. Okay. Think when you look at the stock market, in the long run, it goes up. Why? Because more money are put into the market. It is that simple. Okay. When you, the general public, automatically put money into your 401k to buy more mutual funds, well, that's how money flow into the market. The stock market changed forever when 401k was introduced. Just go back and look. If you don't, if you're curious, go back and look when 401k was introduced and how the stock market did since then. It's a remarkable return because there is money flow into the asset. Just like there is money flow into crypto, and doesn't matter what the reason is, the direction is north, higher, to the right. Okay, so as long as the asset is flowing into there, that's the path it's going. Okay. Otherwise, the rest is just narrative, talking points of people trying to spin for whatever reason. I don't know. Okay, I really find it completely silly. I trade on my own, using my own brain, decipher things on my own, not watching any guru on YouTube. All right, so that's BTC. It's not high enough to sell more, and certainly what I did the past couple weeks has been selling cover calls and IBIT. I did trim some BTC ETF, but as far as my BTC holding that I bought down here, I'm holding. You know, I use TA. It is that simple. You know, buying at 78, buying between 82 and 78, where the gap and the gap fill happened, was the thing to do. I'm glad I stepped in and bought. I think altogether I bought 17 cents of the real thing. Right, so yeah, for now, nothing to do there. Okay, nothing to do. Dia getting close to worth watching shorting again. All right, it is that simple. It's not random that it came up to the 200 and stick around for a couple days. The confluence, TA ruled the day. None of this is random. Okay, it's up to the ref high. Okay, so be careful. Would I short right here? No. I would love to see it pump there. Okay, yeah, up there. Heck, if it get anywhere near the all-time high, my God, yes. SPY, getting close, okay. I would love to see 609, 610, 613. Come on up. Daddy's waiting. QQQ, same thing. Lockstep, come on up. I don't know if it have enough juice. It might depend on what President Trump can gas up the market with more trade good news. But come on up. I'm waiting. IWM, yeah, not random. The worst indices of all. Well, when I come down to the 4 major indices that I ran through every week. But if you bought down here, congratulations. But you should be trimming. Okay, you should. The 200 is a definite sell. Okay, because it was support. Breakdown is gonna be resistance. Okay. Whatever used to be support, if broken, can be resistant. Whatever can be resistant, if broken, can be support later. Okay, that's how it works. I don't know how many times I can say that. I'm tired of it. I'm tired of repeating myself on a weekly basis because I don't mind teaching, but I'm tired of repeating myself. Okay? Just tired. Learn it, mofo. God damn it. What's wrong with you? Huh? Can't be freaking not remember what I say on a weekly basis. If you hear. Okay. Done with this. Done. Okay, done. I can go through the litany of ticker, but seriously, the market's up this week. Is there anything that is going to be shocking? Let's talk energy. Now, as strong as the equity market has been, okay, I just show you, DIA, QQQ, SPY, rocking. But oil, weak. Trust me, I wish oil was up here so I can short again. Okay, so there's two things with oil. Drill, baby drill, the narrative that President Trump wants to keep going out there because, well, low energy equal lower inflation. It is that simple. Okay, high energy flow through many things. So he wants to keep inflation. President Trump is trying to do a very hard task. I'm not saying that he cannot succeed. I'm just saying what he's trying to achieve is extremely difficult. It sounds nice. Drill, baby, drill. It sounds nice, okay? It sounds nice back in 2016. It didn't work. I talk about that extensively. Why did it not work, drill, baby, drill back in 2016? because the fracking trend, the previous 10-year, nearly bankrupt the energy industrial complex. Yeah, go back and look. Billions and billions of bankruptcy. Okay, the banks, the big oil was not about to go in and put billions into the sector, invest into building more, when the entire sector went through a major bankruptcies trend for the past decade. So yeah, go back and look. If you think what I said as far as drill baby drill did not happen in 2016, go back and look before you spill your mouth and say that I'm wrong. I got plenty of receipts that I can show you, and I did. This time, the problem with drill baby drill and keep energy down is that oil company have a threshold of profit, right? At certain level of oil price, they will not invest. Why would you? If it costs, let's say, if Exxon or Chevron break-even cost is $60 a barrel. I don't know the exact amount, but let's say that's the amount. If drill baby drill and a weaker global economy knock the price down below 60, they are not going to drill baby drill. They're going to be cutting jobs. That's the last thing that President Trump wants, is job loss in the oil industry, right? So it's a difficult task. He wants to build up American energy to create jobs, but at the same time maintain a certain level of oil price that the oil company can make profit, because that's what we live in, a capitalistic world. He need to make things work where A, they create jobs, they make profit, and demand, keyword, demand for energy is at a certain level that keep price above the break-even point. Not an easy task to do. I'm not claiming that he can do it. I'm just saying that given where the equity market has behaved and how oil behave, something is not lining up. And for sure, I can say that demand is not lining up. We are making plenty. We are pumping plenty. We can pump more. If the world have a need for more oil, right now, the Exxon, the Chevron of the world don't need to drill more to give you more. There's plenty. The problem right now is the demand is weak because the global economy is weak. That's where the problem is. Hey, in a perfect scenario, President Trump would want the global economy to be booming, and we can pump all we want and maintain oil somewhere in the $70 a barrel, because A, it creates jobs, companies are investing in drilling more and making money. That's the perfect world. And keep inflation low. If oils are in the 70s, heck yeah, perfect world. We don't need oil to be in the 80s and the 90s or whatever it is, because then it will ignite inflation. Okay, so it's a delicate balance. Okay, it is. Speaking of which, let's talk about gold. I like gold. Hey, I'm very happy to trim 20% up there. Bought back here. Well, first was, lesson learned. Okay, then trim here, add here, trim there, then buy here, bought down here, gap fill. Okay, so so I was fine buying in 292. I am at the heaviest in gold right now compared to here, and Does that mean that gold can stop going down? No, 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 no. I do think that if we have more trade good news, if we have more trade good news, it would not shock me to see gold fill this gap down here in the 278-ish area, right? That's, nothing is impossible. Okay, when it comes down to TA, as I said this over and over, we are focusing on one level at a time. Nothing wrong with taking it 2 level, but focus is on next level. Okay, so sure, the next level of support is the fib, and that kind of line up a little bit with the previous high, right? This area right here. But the gap fill to me is an easy decision to buy because it kind of line up with the next fib. Okay, so plus the 100 MA is going to rise right into that next week. So there's a confluence of support, but it will change every week. Data change, data point change. So for now, I'm content with that. Would I trim? If gold pop into the 20, I'm trimming. How much would I trim? I might trim everything that I bought down here. Okay, I do think the short-term high on gold is in. I don't know what the catalyst is for gold to break into new high and whatever crazy prediction the expert on TV say gold will be 5,000 in 2028, whatever. Price target is ridiculous. Absolutely ridiculous. People ask me occasionally in the comment section, do you have a price target for XYZ? No. Absolutely not. Not that because I'm a trader, short-term trader, but no, I use TA to see where things go or where things can go, short-term and long-term. I don't have any kind of price prediction year-end target. The year-end targeting is retarded. Okay, trust me. The sooner you ditch the year-end target for anything, the better. It is nonsense, absolute nonsense. Talking point on CNBC, Wall Street Journal. That is just absolute nonsense. Ditch it, please. So for now, that's what gold is. Okay, I do have one naked put GDX that was assigned, which is fine. I'm gladly bought back the 100 share that was assigned above. Yeah, at 50. So welcome back. And I sold one more. I sold 3 puts last week: 47.5, 45.5, and 44.5. I have already restocked a 44.5 for next week, and on further weakness, I will sell more. But for now, my holding on GDX is very small. It's 200 shares right now. Yeah, it's not big. Okay, it's not big. Down here, 700. At one point down here, I had 900. So yeah, it's 200 from 900. Yeah, it's a long way. Okay, it's been a long way since I had that much exposure in GDX, and that's fine. If it come down to the 100, oh my god. Well, for now, 44.5 is my next area, right? And I would not sell any more naked puts higher. I'm watching gold to see how it's going, and on further weakness, I will sell, say, 43. Okay, I would not mind adding another 100 down here, adding another 100. Hey, if it come all the way, so make no mistake, there will be a stop. Okay, Depend on how it behaves. Same thing with gold. If there is a move up, let's go back to gold. Okay, gold, as I said, have hit the short-term high, and I don't expect it to somehow break out yet. But let's say if gold pop, okay, I can easily put in a stop on what I bought this week, so that I lock in a small amount of gain. I don't care. Okay, let's say gold get anywhere near 300. I definitely will put in a stop to lock in gain. Okay, I might even put in a stop down here at 291. Right? So because if things fall apart and come down to this gap fill down here, why not? Why not? Why would I want to hold on to something at 291 if I think it can go down to 279? Yeah, it's how much would I stop? Well, maybe 25%. Okay, I can see myself saying bye to 25%, basically at a small gain, because I paid 292. I bought between 292 and 293. So yeah, if I get stopped out at 291, small loss, but buying them back at 279 is pretty good. No complaint there. So when it comes down to GDX, I'll probably do the same thing, right? The share that I have assigned, that's fine, but I probably will put a stop where? Probably 45, the low of day yesterday, which is 45.25, right? It will be unpleasant to have that stop kicked in. But if the end result is buying them back $3 cheaper, heck yeah. Heck yes. Okay, that's what a stop is. Minimize short-term damage for bigger bargains later. Okay, so that's the plan. The plan is, okay, you gotta be fluid, you gotta be ready. I'm certainly feel blessed that I have the free time to follow the market and do things quickly. So it's not easy for people that don't have the free time. Okay, if you don't have the free time, my advice is simple: just buy the SPY or the QQQ or both. Just buy it. If anyone have a long-term horizon, if you by long-term I mean at least 10 years. If you have a 10-year horizon, even if you're 50, if you're 50 years old and you say to yourself, I don't need the money for another 12, 15 years, that's a long time. I would put everything in the S&P 500 if I was, have a dozen or 15 years horizon. But when I come down to it, it's like, how do you sleep at night? Okay, before I go, my philosophy of trading / investing is, how well do I sleep at night? I'm willing to take the risk. Okay, it doesn't bother me that I'm overexposed in the stock market in a certain sector or not. At the end of the day, I sleep well at night. I don't go to bed worry. Oh my God, what's gonna happen to the stock market tomorrow? Is it gonna drop 10%? Is it gonna drop 20%? Am I gonna be in trouble? Luckily, I am in the financial situation where I have not need a nickel or a penny from my investment portfolio to pay the bills, the daily bills, to live. None. Nada. Nothing. Okay, so it's nice. It's nice to be able to be in a financial situation where my investment portfolio is just that. It's to play. But it's not for everyone. It's not, if you're the kind of person that you find yourself worried, concerned, fearful of the stock market, then maybe it's not for you. I cannot speak for anyone. I can only speak for myself. Okay, I trade for myself. I invest for myself. I want people to be able to do that on their own. And my approach is, as long as I am okay with the risk, as long as I go to bed not worry about the portfolio, no matter what. That's the key term, no matter what. Because yes, I'm 58, but I don't plan to drop dead in 10 years. God's willing, and focus on good health. When it comes down to it, people, focus on your health. Okay? Money is worthless. Let me repeat this. Money is worthless if you don't have your health. So before you worry about your portfolio, before you worry about if you have enough money to retire, before all of that, focus on your health. If you don't have your health, it means nothing. It means nothing. There is nobody on their deathbed that are going to say, God, I'm glad I am so wealthy. Not one. There is not one person that is on their deathbed that is going to say, I'm glad I'm rich. Nobody cares. Everybody on the deathbed wish I have more time. Okay, so focus on your health. It should be number one, always, rich or poor, always, number one. And then the rest is gravy, okay? If you happen to have money and good health, great life. I can't complain, okay? I can't complain. And with that, I hope this rambling 1 hour of streaming adds something instead of going over all the same ticker with the same analysis. It's tiring, okay? It's tiring. It's boring as F. My God. Get a life. You don't need me. You do not need me anymore. Later. Thank you for watching. It's been a fun ride, but it is necessary for my sanity to say F off.